Good morning, everybody. Welcome to the Flow Show, Monday, 25th of March. Just me on my own today. K-Man's off for a couple of days. So we'll get straight into it. I hope you're doing well. Hope you had a good weekend, all refreshed and ready to rock and roll this week. Right, let's go and get into it. Over in Japan, we had a little bit of data out. Store sales number coming out over there. And if I get to the right page, there we go, give it that. Has it even got it on here? No, it hasn't got it on here. Well, there we go. Japanese, anyway, I'll give you what the numbers were. Anyway, Japanese nationwide department store sales were up 14% versus a prior 7.1% previously. That's year-on-year numbers. Tokyo store sales up 18.5% versus 6.7% previously. So decent jump there for retail numbers in Japan. Everything is seemingly going their way at the moment. We've had the top FX man Kanda coming out overnight as well, literally bringing out every line of on the DEFCON level, shall we say, in regards to verbal interventions, as we have been closely watching FX moves with a high sense of urgency. Will take appropriate steps to respond to excessive weakness of the yen without excluding any measures. It says yen's current weakness is due to speculation. It's not reflecting the fundamentals. Then repeated, current yen weakness does not reflect fundamentals. The yen weakness based on speculative moves has negative effect on the economy. And speculative moves are not good under any circumstances. Says he doesn't have a specific forex level in mind when he was asked about what is the defense line for weakening yen. Says we'll make a more comprehensive decision when looking at whether there is excessive moves rather than levels. Sudden forex moves are not desirable. So really throwing it all out. The only thing he didn't really put into that is the volatility, whether they're seeing enough volatility at the moment to intervene. But this isn't the first time recently. Before the Bank of Japan, a month or so ago, they also came out with some verbal intervention, pretty much out the blue, that ticked the verbal intervention bingo card, if you like, for the amount of stuff they talk about. So this is another one. Yen didn't have that much of a say in things, didn't hardly move at all, really, on those comments. Small down, but nothing that broke anything. So they are still keeping some pressure on while we're up here in the 151s, close to that 152 magic line that everyone has been looking at. We also had the minutes of, not this meeting just gone, but the meeting before from the Bank of Japan. So they're pretty pointless, really, but they did give a little hint as to what was to come. They said the likelihood of hitting the price goal was gradually rising. A delay in ending negative rate risks a rapid tightening later. They said the BOJ flexibility is to be reduced when others cut rates. One member said now is a once-in-a-lifetime opportunity to change monetary policy. So, as I say, those comments, not from the meeting last week, but from the meeting before. But they were all getting lined up, it seems, for that meeting. Over in Spain, PPI data from there showed a significant drop. Year-on-year, PPI was down 8.2%. Month-on-month was down 2.3% in February versus a rise of 0.2% in January. So disinflationary pressures still there in Spain and potentially picking up. Last week, ECB's Lagarde said, speaking to in Parliament, that the decline in inflation in the EU area is expected to continue. She apparently then told leaders growth is projected to pick up in the course of 2024, mainly driven by increasing purchasing power. And she told EU leaders that economic resilience will require higher productivity, which needs higher capital investment. A little nudge there to the fiscal side of propping up the economy or getting economies moving. There's always a point with which the central bank, the ECB, switches to pushing governments to do their part, as the ECB seemingly do theirs. ECB's Scicluna says that an April rate cut is not impossible or even improbable, talking to EconoStream last week. One of the other doves, ECB Centeno, says policy must and will follow inflation reality, and says that they are at the end of the inflationary process. A little bit of a pat on the back there. Over to the Bank of England. HSBC now expects a 25 pip cut in June for the Bank of England versus August previously, so lining up with a lot of other central banks as far as HSBC's is concerned. While we're with those, they also raised their 2024 year-end S&P target to 5,400 from 5,000, so a yank up there. We'll see whether that's the kiss of death for stocks. Coming back to last week's data, wasn't an awful lot on the Friday. We did have Canadian retail sales coming up, beating expectations. When you take out, when you look at the core numbers, headline numbers came in not as soft as expected, but that core number was pretty positive for those guys. And that's about it at the moment on the headline front. Been a pretty quiet. Well, quite a few days, last couple of days, really. We obviously had that awful event in Russia going on, which caused France to step up its alert level as well. I thought that might have been weighing on risk this morning, but the market seems to be brushing it under the carpet. Won't go into the finer details of that, but Russia's blaming Ukraine, and the US are coming out saying that they warned Russia and Russia ignored it, whatever. Awful event anyway. But yeah, there's been a few alert levels, as I said, in France rising, and other countries as well, taking a look at that just in case something spreads from that, which we hope not. So just keep an eye on risk coming into this morning. We'll have a look at what's coming up this week as well. Not a lot coming up today. We have new home sales and some of the more other regional manufacturing surveys. Tomorrow, durable goods. That might be worth watching. Durable goods, if you're looking at it from the point of view of the consumer side of things rather than the big ticket defence and aircraft stuff. You're talking white goods, electronics, that sort of thing. Might give a little bit of an indication as to whether the consumer is picking up or not. If those durable goods are strong, it says there's strong demand. If that's weak, that's going to play into my totting up, shall we say, of recent numbers that haven't exactly excited me in terms of what the consumer's doing. So we'll keep an eye on that one. Get some house price data out of the US, which doesn't seem to be flagging any problems thus far. In some of the other numbers. US consumer confidence, again, another confidence number coming in. That's the conference board number, so that will be closely watched. Within that, obviously, the inflation expectations numbers will be equally important there. Then there's the Richmond Fed manufacturing. On Wednesday, pretty quiet all round, really. The economic sentiment, again, the inflation numbers in there, consumer inflation expectations and selling price expectations are probably the bigger number to watch there. We also get the final of the consumer confidence numbers, which will, as always, be a negative. On Thursday, we get a few bits and bobs. Retail sales numbers dropping in, some GDP dropping in. I think this might be Q1. Is this Q1? No, it's the final Q4 numbers. There's me getting all expectant about that. Let me check the UK one as well. No, that's Q4 final as well. So forget about those unless there's a big, huge variation in those numbers. But coming into Thursday as well, because it's a bank holiday. Well, it's a bank holiday in the UK on Friday and a lot of Europe on Friday. But it seems we're shifting some of the data as well to Thursday because the US consumer sentiment is the Michigan number, which is usually on a Friday, but they're chucking it out on a Thursday. So Thursday is probably going to be the busiest day, but not a lot of other data out. Canada monthly GDP, Chicago PMI, and some more home sales numbers. But we also get a bit of data out of Japan on Thursday as well. So we'll keep an eye on that one. The main retail sales numbers coming out from Japan. As I say, in a lot of countries in Europe, including the UK, on Friday it's a bank holiday. There will be no flow show Friday the 29th, nor Monday the 1st, as it's Easter weekend. Bank holidays on the Monday as well. But we get some data out of France, CPI, PPI number, and Italy. Nothing else from anywhere else. We do get PCE numbers on Friday. So following the last CPI numbers, we're going to be getting PCE just to see if they line up again. So that's probably going to be that's really the first big data since the Fed that will tell us whether we're going to change our minds or whether the market's going to have another little rejig in pricing regarding Fed rate cuts and the June date. Obviously, if it's hot, i.e. if it's higher than expected towards the last month, then that's going to, again, get the market thinking about those dots and whether we're going to be having 3 cuts or 2 cuts. That's the game we're going to be playing at the moment as we did into the Fed. And we're going to be playing that again afterwards. So that's it from the data. Yes, Ali, 2 holidays, mate. Easter, Friday and Monday. There will be no flow show. Right, let's take a look at some of the prices. Not an awful lot going on at the moment. Euro dollar, it's holding. We had a little test down here at the 108 on Friday. It's holding. We had a little test this morning, early Asia hours, holding again there. So this level that we've been watching for a while seems to be pretty solid at the moment. I did have a small bid in Friday, but I pulled it late in the day because I didn't want to get into something late on a Friday night. What is perhaps a little bit concerning, but it might just be that things are quiet first thing today, is that the bounce so far is pretty weak. We're only managing, 18, 20 pips off of that level, not even testing up towards the bottom of my zone and the old 50 fib around 108.40 in these little lows that we had, prior lows, support, before we had the break. So we already had a bit of resistance coming in there anyway. Straight after that breakdown, we got up to sort of 41, 42, and then we continued the breakdown. Then we were holding below the zone. So that's the first area, but we're not even getting close to that. So we're not out the woods regarding this level here. But as you can see, we had support into it around that 108, 09, 10 area. Then we had a little mooch down to the big figure, held it. Then we came up. Now we're sort of holding that area again. So on a short-term basis, it's looking like the support is pretty solid, but the bounce, as I say, is not strong at all. Volatility coming down a little bit again this morning. We seem to have quiet Mondays over the last few weeks when there's not a lot going on. So I wouldn't read too much into this at the moment. We do have some Fed speakers coming up today. Let's just have a quick look who those are, just remind myself. So we've got Bostic coming up in just under 45 minutes. Then Goolsby a bit later. Catherine Mann as well from the BOE speaking at 2:15 UK time. Those thoughts might be quite pertinent because she was one of the hawks that moved to the neutral side of the thing at the BOE. And then later on today, we've got Fed's Cook, but he's speaking on the dual mandate. But this is the first real board or slate of Fed members we've got coming out. So hearing their thoughts first time around might get the dollar moving just to see who was in line with the tone from the Fed last week. But as we get those members coming out, it's okay when we hear from them first time. It's when we've heard from them 4 or 5 times in a month that the market starts to ignore them. So it could be a bit important today. This is the first round of those speakers from the Fed since the FOMC. Let's hope it does give us some volatility, or we're in for a quiet day. Cable, similar pattern. Had a move, held around 125 3/4. Didn't quite get down to my next level, 124 and 125.5. I was looking for maybe that area, even down to 125, maybe to grab a bit of a long, but we didn't get there. Again, the bounce doesn't look overly strong. It's obviously a bit more than what we've done from the euro. As we know, cable tends to have a bit more volatility than the euro. So really from here, probably, I don't know, need to watch around this old area. It's all a bit messy around here. So I'm not going to worry too much. Probably going to play the half figure, big figure tennis, as we like to do. So watch 126.50, 127, and they're on up to 128. But we're still in this wider range, 125s, 128s. We've had a couple of pokes above, but it hasn't lasted. We haven't held. And on the last week, we're now holding back below it. So range bound, range bound, range bound for a lot of pairs. Aussie dollar, another one. Let's get into that. Still messing around with this zone, so it's becoming a little bit washed out. So use it sort of as a bit of a pivot area rather than, you know, trying to trade in the middle here. When we're below, we're just seeing little bits of resistance. We can't hold above it. That's the key point here. Since this breakdown, we've had a big move above, but when we came back down to it, it didn't hold at all, and we carved straight through it. So if we're going to see something moving up, you know, something a bit more solid rather than event-driven headlines and whatever, we need to see a bit of a solid build above this 65, 40, 50 area. Start to see support coming in there, then we might have something more significant moving up to the 66s. But as I said, nothing really that's showing anything wants to break at the moment. We're just walking these ranges. We've been down here before. We've been up here before. You know, there's nothing much that's changing the needle on these things. Dollar China as well took a bit of a slap overnight. No real headlines out. State banks apparently were in. It looks like they might have been chucking bigger hand grenades at this than they previously done. It seems like this move was a bit more of a let's hit it with a mallet rather than just smooth people buying dollar China. Obviously, the main move it happens is in CNY rather than CNh, but obviously the move is reflected here. So a bit of a bigger move. That might suggest they are not willing to let this rally too far. They're happy for it to sit in a range and, you know, mooch around a bit. But if we do get these big volatile moves, then they're looking perhaps to hit it a bit harder than they have been previously. So again, that suggests that they're not willing to let this run too far. There was some speculation, well, let's call it zero hedging on Friday about China devaluing, but I don't really see a circumstance why they would want to do that. Remember, they're supposed to be hosting some US executives this week. So again, you know, you're not going to be talking about devaluing your currency when that's going on. So yeah, we'll see if any headlines come from that. They are trying to repair, shall we say, international relations, particularly with investors who have been jumping out of China as fast as their legs could carry them. So they want to try and turn that around. If we do get some positive vibes from that, then I'll probably expect the yuan to gain some, and we'll see dollar China dropping back maybe into this zone. And if it's really good news, maybe a bit further. I'm still short on this one, still happy to stay short. Above 728, 730 though, I might get a little twitchy and just maybe look to tighten stuff up regarding my stops, and then we'll see what happens from there. But if we get a move up to this 736 area, it's going to be interesting to watch. As you can see, it's a big old level. It's almost like the 152 in dollar yen. So it's a decent area to have a look at. And depending on what the news is, I may have a look at adding back to shorts on that move there. What else? Dollar yen, Ali, let's have a look. your long dollar yen at 151.19, 79.49. Okie doke. So, as mentioned, didn't do an awful lot with that jawboning overnight. We're not straying too far from this 152. I think that's the important thing to look at it at the moment. We've come through the Fed, we've come through the Bank of Japan, and we're still not far from this. Still suspect there's barrier trading going on up here at 152. I'm still half in the mind that maybe is a bit of a level for the BOJ or the MOF. Hence why we're getting this jawboning below it. Certainly, if we do get a test above it, if we get a break, it's going to be interesting to see whether that triggers the MOF into action. As I've been saying, if this had been any other pair, any other time, I would be thinking about buy stops, looking for a break. But I don't like the intervention threat up here. I don't like that it might be a level, an unspoken level for officials. So I don't want to get into a buy stop, but 152, 20, 25, and then all of a sudden they come in and smash it down for 100 pips. Because even if you have stops in something like that, if it's a big move and we gap down, your stop is going to get filled at the next available price. There's a chance it doesn't get filled at your stop level. So if I was buying on a break 152.20, I had a stop at 151.80, and it gaps down to 149, that's where I'd get filled. So it's just risk management at this point. There's a big risk for trading this level, as I would normally. So I'm not happy with that risk. So I'm less inclined to trade it. But I'm also not really inclined to short it. Because we know it's going to cost you to sit in it if nothing happens. But if the level does break, it may have some legs. And if it's not an intervention level, then again, it's probably going to be a losing trade. So, yeah, just my risk parameters. It's too big a risk for me to get involved up here. But Ali, you take it with you take your trade as you want, but bear in mind the risks that we have right now. It's a different risk to what we had 2-3 weeks ago. Okay, the market changes, the officials change, their rhetoric changes. You've got to take that into consideration. But at the moment, it's not doing an awful lot. And while it stays quiet, that should keep the fingers off buttons in Japan anyway, because it's volatility, as we said, that's a big part of this as well. Stocks we'll have a look at. Which aren't doing an awful lot either. Let's zoom this in a little bit. So we're getting a bit of a bleed off the top here. Had these highs and we're just sort of edging lower. Now, as I mentioned last week, this is a bit of no man's land in here at the moment. We had this break point, it shot up. We had some really minor, let's see where the support's going to be type levels. It's moved below those. It's bleeding lower. We're into this no man's land. So we're waiting to see what happens in here. Do we find some more solid support, or do we just drift all the way down and then see what happens down here at the break point? So for me, it's just about price watching. Not enough to call a top up here. This 52.50 area, 49.51, whatever you want to call it, that's potentially where resistance is going to be, but it's still unclear. So this area, probably call it a little mini zone, is probably what you want to watch for any rallies at the moment. If we get a decent period when we move up here, let's say 52.50 holds as resistance, and then we start drifting down and then we break the low, maybe we're building a bit of a top. But we've done that, as you know. Sound like a broken record. We've built tops and we've broken. We built tops and we broke them. We built tops and we broke them. So do not be thinking that this is the all-time high and we're heading south. It might be, but I haven't got enough evidence to class it as such. So I'm going to treat it the same way I've treated it for the last 2-3 weeks. Wait until we get further evidence that we've got a top up here over a decent period of time. Let's have a look at gold as well. So I was saying on Friday, I said to Blake Friday, this move here when we shot up to 22.20, it came late in the day, coming into Asia, or was in Asia time. It looked a little bit of a low liquidity move, a bit like when we got that spike there, which again came in over the Asia session. So it looked like a little bit of a blow off the top, shall we say, in that low liquidity time, because we've come back since. Support obviously around 21.50 is the main area. Again, the bigger stuff is still all the way down here, but we're sort of holding that prior high as well around the 45.50 area. So that's become a little bit significant. We did make a higher high after that high, so potentially that keeps the trade moving. Also, we're just seeing it's only small stuff, just the lows creeping up as well, as you can see there. So maybe we are on for high levels as well. But if we break under support, this 40-45 area, then maybe we're going to be heading back towards 21, and we'll see what we do there. Ali, good. Putting your stops at break even. That's always sensible, mate. Morning, Marcus. Good to see you, mate. Right, come on, boys and girls. Let me see what you've got going on this week as well. Seeing as on my own, I can't ping it over to K-Man today. While you're doing that, let's have a look at yields. Potentially important move here. We've had a test of that 420, and we've held it. Now, as I said, with the data, with the US stuff and PCE coming up, the market obviously had to reprice its overly hawkish thoughts about two dots, shall we say, or dots moving to two cuts last week. I don't think we finished playing that game. Any hot data, hot inflation like the PCE is going to get the market expecting that. I think at the least that June gets pushed back a bit, because we are getting closer to that June date, and the Fed really hasn't indicated, like some of the others, that they're going to go in June. They're a bit fearful of this data. So if we do keep getting good data, hot data in the inflation numbers, the market is going to be playing that cut game again, reducing cuts and pushing the date out. Now, that shouldn't matter too much, whether they cut in June or July or August or whatever. It shouldn't matter too much to the longer term picture. The market knows that we're going to be cutting. But what we're going to get is just the sort of intraday, intra-week volatility around those central bank meetings, around the Fed. So this 420 is potentially an important line. If we get soft data, data that indicates that 3 cuts are more possible and that June is more likely, then we're going to see yields coming back under 420, and we're probably going to see the dollar weakening somewhat. Then we'll see cable, euro, dollar, etc., moving back higher again. But I'm not looking at anything going 200, 400 pips, anything at all. We're just in ranges. We've been in ranges for a while, and we're going to remain in ranges throughout all this, unless economies start tipping over pretty hard. Then we'll probably get some bigger trending moves. But for the likes of the Eurozone, UK, US, we know what the fundamentals are like. Potential green shoots in Europe, UK, US seems to be ticking along nicely. There's no reason for any ranges to break or move significantly. Ali wants to look at Euro Swiss. Let's get that one. Where is it? Here we go. Okay, where are you looking to get in? Just above the 100 SMA. Oh, let's get my moving averages up. Why are they not on there? On the 1 hour chart. Let's have a look. So that's my 100 in the blue there. So around 96, what are we talking about? 96, 97 for that one. Let's see what else is going on around there. I don't have an awful lot of tech. I need to clean up my charts on this one. Come on, moving averages. Where are you? So, all right, you got a bit of a level here. 96.80s, call it 97s, a line in there. Let's whack it in anyway, just to have a look. Around about there. So that's where your 100 moving average is. So a quick look at the weekly, see what's going on there. So you've got the 100, 97.50 there, and then you've got the 96, that's the weekly, that's the 55 down there. So you've got a few bits and bobs building up below, but you're looking at the hourly, so around about that 97 area. Yeah, there or thereabouts. You know, you could have, if you're going in against that line, against the moving average, you know where your stop should really be, somewhere below that price support resistance that's been in play a couple of times. So that technically that's where, you know, again, there's two ways to play this. You can maybe add a little bit there rather than put all your trade there, just in case we move through, and put a little bit more there. So split the trade up. What that does is that can help you manage your risk. You know, if you stick it all there and you don't want to stop above this area, otherwise you get hit on your stop, and then you probably see it bounce or something like that. So there's always ways of doing it. And when you have levels, lots of levels in close proximity, that's what I can tend to do. If you're not sure which one to trade, then you just maybe split a trade up between 2 or 3 levels. Same amount of risk. You just cut your trade side for each entry point. Just allows you to spread your trade over a little bit without increasing your risk at all. So yeah, you can spread that over a bit. As to what's happening in the Swiss, there's nothing going on in it at the moment. So it looks like we're just waiting to see what happens next. Are we going to go and take on this high, or are we going to wash out a bit more? So again, just look at your support points. Know where the market might be changing its tune a little bit. Another one I've been looking at is dollar MEX. I was long this last week. I was in half a mind to cut it Friday, just for the sake we were back down towards support, but I didn't. I kept it on, as you can see here. So I was long last week. Got a bit of a rally up here. But it's come back down. It didn't really get up to a test of 17.05, so we're potentially not done with the downside here, but we have just stepped it up. We had that low, then we've just stepped it up, and then we've just stepped it up again. So that was my reason of keeping this last week, just seeing that stepping up. So I'm still a little bit long on this, but yeah, need to see this level busted out, and I'm going to be watching this closely, obviously, because I'm on the wrong side of the carry. So it's going to cost me money the longer I'm sitting in it. So yeah, if I get another little rally up here, maybe I'll tip a bit more out, just keep a little bit, and just try and reload on dips while this support holds, and just be a bit more dynamic. Add on the dips, let it out on the rallies, add on the dips, let it out on the rallies, pays for the carry, enables me to keep a little core position in case we move higher on that. Right, well, I've not got much else to talk about at the moment. It's all pretty snoozy, and not a lot going on, not a lot of data, as you said, out today. So might be a good day for doing the paperwork, boys and girls. So you've got any jobs you need doing, get it done while it's quiet. We'll call that a morning then. Nice quick one for you, guys and girls. Thank you for coming to the Flow Show. We'll be back tomorrow morning as always. Have a good one, and have a great week, everybody. Thanks a lot.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.